Good afternoon, guys. It's working. Bringing you a quick update on Bitcoin. Hope you guys are having a wonderful Sunday afternoon. We're looking at Bitcoin to the US dollar 4-hour chart on Coinbase. And last time we spoke, guys, Bitcoin was sitting right on top of this $9,400 zone. I told you guys to very likely I told you we may end up seeing a bounce here if it didn't break decisively below 9,400, which it has not as of yet. So I was expecting a bounce, as I said, to about, I believe last time I said about 96.50 to 90, or excuse me, 96.50 to about 95.50-ish, somewhere in this area here. And I still believe that that's a real possibility. We may have already seen that. I mean, we did already bounce as high as about 95.70-ish, somewhere thereabouts, guys. But I wouldn't be surprised. Certainly don't have to, but I wouldn't be surprised to see price jump up here between about 97 to 9,800-ish. Maybe even as high as retesting our ascending support line that we've had here that we finally decisively did break down. Now, why do I say that? I say that because oftentimes what is a very, very clear resistance, or excuse me, support, in this case, very clear support in the past, has acted as very clear support in the past. Oftentimes when it's decisively broken below, it does want to come up and retest it and get a rejection and then often continuation to the downside. So I am going to be looking for at least a retesting of that zone, if not this 95.50. Let me switch over here to the daily, kind of give you a little better idea. I wouldn't be surprised to see a testing of this between about 97, 9,800-ish, somewhere thereabouts. In fact, if we come back here to the 4-hour, as I was showing you guys yesterday, we do have some pretty clear, obviously price is in a downtrend here. We do have some pretty clear, let me just get rid of the RSI. Looking at the MACD, we do have some pretty clear bullish divergence here on the MACD. Now, you could say that may have been cleared with this little uptick here down to about 95.70-ish, but I do think that there's a good chance we have a little bit more upside. That being said, guys, truly, that doesn't have to play out. I don't want to make it sound like it's going to. Do I have enough conviction to where I'll take that, or conviction to where I'll take that trade? Absolutely not. And I do think even if we do come up here testing this zone, I do think probability is now in favor of the bears. In other words, I do think we get rejected somewhere between that 9,700 to this 95.50, maybe this ascending support line here, and then I think there's a good chance that we continue back down, certainly back down to 9,400. But I do think, as I told you before, we might bounce a couple times off 9,400, but when price was sitting up here, I said if we test 9,400 again, even though we might bounce a few times off of it, probability will likely be that we will break it at some point. And I still believe that now probability is in favor of the bears, and it is in favor of breaking down and testing at least 9,000, if not our $8,900 area that we've been talking about. If I come over here and look at our moving averages, exponential moving averages, this is on the daily the daily chart, guys. We can see that we have now had the 8-day exponential crossing below the 55, which is below the 21. So we do have a pretty bearish setup in that regard, guys. Now, it's not completely flipped around. If we do have the 21 now crossing below the 55, or the 55 crossing above the 21, however you want to look at it, that's going to be a completely bearish posture, and that's when, of course, that's when things very, very likely could get very nasty. Now, we're nowhere near there yet. That being said, we have had the 8-day crossing below the 55. That is a bearish setup. We have tried to break above it. We have been rejected now a couple times. So, this is indicative of the bears taking temporary control of the market. Even though, as I said before, guys, the overall macro trend I still believe is very, very much intact to the upside. But in the mid, maybe certainly the short term, well, it depends on how short term you want to target. In the very short term, we may get a small tick up, but in the more short to medium term, I do think we come back down. I do think 94 gets broken, and I do think we start testing around 9,000-ish. If I come in here and look at the 4-hour, just zoom in here, we can see we are testing the 8-period exponential on the 4-hour now. We do have a completely bearish setup on the 4-hour, and we're seeing light in between. In other words, we've got the 55 on top of the 21 on top of the 8. So that is a very, very bearish posture, guys. Would suggest a break to the downside. That being said, we haven't seen a breakdown with any kind of major force as of yet. This was the closest thing we had it, but we haven't had those Bollinger Bands stretched out, to the point to where, it's very, very obvious momentum is shifting to the downside. Even though momentum is shifting to the downside, it's been a very slow drip. That being said, and I know this is you're getting sick of hearing this, but volume now is extremely low compared to what it has been. We're sitting at about 11.9 billion on the day. If we look back historically, is what at what it's been over the last week or so, really since the 18th when all this started, when all this happened, July 18th. Again, we started off at 25, and as I discussed, it's been kind of a slow drip. Every now and then picking up. We went from 16 to 17, but then again, right back down 15, 14, jumping up to 16 briefly, and then just a massive nosedive down to 11.9 billion for today. So we haven't seen 11.9 billion on volume before. I'm not going to go back, but it has been months since we've seen volume quite that low, which that does mean what? That means traders are sitting back and waiting for resolution. That means nobody really knows what to do until we do get resolution to the up or to the downside. Now, we have had a little bit of a spike in shorts. We come in here looking shorts with just a slight spike in shorts, but longs are outpacing shorts basically 3 to 1. For the most part, it's sideways movement. For the most part, nothing really, nothing significant at the moment. Again, people just sitting on the sidelines waiting for resolution. Checking the weekly chart, the weekly we are trading below the 8-week EMA, and this today the weekly candle does close today, I believe, in about another 5 to 6 hours or so. I think it's 5 or 6 o'clock Eastern Standard Time, so about 5 to 6 hours from the time I'm making this video. So if this does close below the 8-week EMA here, guys, as I've discussed in the past, I do believe that will indicate that very likely we will have further downside in the short term, but in the overall longer term, guys, that is going to indicate basically the beginning of the end. In other words, yes, if it does close below there, that would indicate we do have further downside to go, very likely coming down to test our 21 week EMA, which is currently sitting at about let's see, 8,150. Of course, as soon as we tick over another week, that'll jump about $100 or so. So again, that does suggest that $8,500 to $8,900 area, mid 8,000s is what it does suggest. And of course, it would suggest that we'd be coming down there fairly quickly if we do close below the 8-week EMA. Again, I do think that'll get the ball rolling. I do think that's going to go ahead and favor the bears here in the short term. Bears are going to win the battle. They're going to go ahead and follow through, slaughter most of the bulls that they can. At that point, I do think that we see a bull rally, and I do think it happens somewhere between 8 and 9,000. We call it split the middle. 8,500 is that zone that we've been watching for ever now. Every indication, so many indications, guys. Look at my past videos if you're curious, but just countless indications point to 8,500. It's not just the CME gap. It's numerous things. So 8,500 is the zone I'm going to be watching, is the zone I'm still watching, is the zone that I'm going to be looking to add to my long position at. It's not until we take out the prior low of this candle down here on, let's see, basically June the 3rd and June the 10th. The close on June the 3rd, the open on the weekly on June the 10th, and that sits at about, call it about 7,600. It's not until we take that out that I do start to think the overall macro trend is in danger. But as long as we're above that zone, guys, the overall macro trend, this still can be considered a healthy correction, and I still would be looking for a nice bounce somewhere around the 21-week EMA. Looking at our weekly RSI, as we've discussed before, we can look from point to point. Clearly, price has created from our low here of about 7,600 to our current price point. Price has created a higher low. If we look at the weekly RSI, we can see the weekly RSI has already created a lower low. Clearly, that's divergence. In this case, the overall macro trend is up. We're looking at the downside. That's going to be hidden divergence. In this case, hidden bullish divergence. And I know you guys have heard this before, guys, but again, that does suggest that price may come lower here, but this does suggest the overall macro trend is still intact, is still healthy, and we can look for a bounce. Again, probably somewhere around the mid 8,000s, if not the $9,000 area. Looking at the daily is looking more and more, as we discussed before, guys, the daily is looking more and more like a potential falling wedge. We take some liberties here, cut the wicks off here, guys. I mean, it is, and again, this would give us a target somewhere in the mid to upper 8,000, so 8,900, 8,500, somewhere in that neighborhood, if we do continue down. Remember, I just started discussing this back here on July the 25th. Told you that, you know, if it does just move sideways here, that'll completely invalidate that. And we did have a bit of a fake out. On July the 27th, price broke up. It did look like that was going to completely invalidate this, and then the bears pushed it right back down within this zone. So kept this, it did keep this overall potential falling wedge. I'm not calling it that yet, but it certainly is looking more and more like that. And if we do end up breaking below 95 9,400 in the next 24 to 48 hours or so, that will, in my book, confirm that falling wedge, and I will be looking for a bounce somewhere between 9,000 and 8,500, the chart would suggest. Maybe wicking below 8,500, but again, the chart would suggest something like this. Now again, does it have to play out like that? Absolutely not. Could be a million different combinations, but that's kind of what I'm going to be looking for, again, if we do break 9,400 in the next 48 hours. Now, I always want to make sure I'm giving you both scenarios here. So if, in fact, and we know the only thing consistent about Bitcoin is it consistently surprises. So could we get surprised here? Could the bulls just completely take the market over and just outsmart everybody and we continue to the upside? Yeah, that's possible. That's why I say, better to wait for resolution on this. So what would be resolution? We've got two major areas of resistance. We have this descending resistance line here of a potential falling wedge. Certainly it is a descending resistance line, but of the overall potential falling wedge, that gets broken above. Of course, we have what has been support going all the way back to about May the 11th. Which we did break down below on yesterday on the 27th. If that does not act as resistance, if we do end up breaking above that zone here and without even acknowledging it, which basically coincides nicely with our 99.50 area of what was support then turned into resistance. If we can get a daily candle closing above that area, my bias in the short term, it will certainly invalidate the entire falling wedge theory, but my bias in the short term will become bullish, and I will be looking for a move back up to this $10,650 zone. It's $10,650 that we do have to take out before my overall midterm bias does shift bullish, and I will start picking targets, of course, at least 11,050, more likely 11,500, 12,400. I'm just playing very small scalps at each potential area of resistance on the way up. So that's kind of how I'm playing it, guys. I'm going to go ahead and wrap things there. I know it's not the video that you wanted to hear. I know it's not. We're going down. We're going up. Again, my bias is down. My bias is a small, very likely, a small jump to the upside, about maybe 97, 9,800-ish. Then I'm looking for a rejection. And I do think, assuming that that does play out that way, I do think if we do get that hard rejection, I don't think 9,400 does hold up a second time. It may just kind of bounce on top of here for a little while. But once we get that testing of this area between about 97, 9,800 and get a rejection there, I do think at that point when we come back down, if we come back down, when we come back down, 9,400 does get broken and we do break down possibly down to 8,900. Now, it may not be 8,900 right away. We may get a slow drop here. We can see that we do have, if we come back here and we look at our prior area of consolidation was right here. Actually, right here between 9,400 and about 8,900-ish. So you can see if I kind of zoom in here to that area on the 4-hour, you can see we do have a couple areas of very real potential support. So I'm not sure it's going to be a complete free fall from 9,400 as we've seen here in the past. It may be more of a slow drip down to 8,900, but 8,900, 9,000 to 8,900 will be my target at that point. We can see that we do have, if we come back here, let me kind of just zoom out on the chart, and we look at this area right here. What do we see? We can see that we have a very strong supply zone. That supply zone starts at demand zone. Basically an area of potential, looks like potential buy orders, very likely a lot of buy orders sitting between about 9,000 and 8,900. We can see that price broke up, wick, and then just took off. We can see that these wicks here denote very likely a lot of unfilled buy orders sitting down here. So, and of course, we had that tested back here on July the 17th when price broke down here very briefly, touched the top of that zone, confirming that there were in fact buy orders there, and then of course it was just off to the races. So I do think if we do end up coming back down into this zone again, somewhere between, let's call it 9,100 and 8,900, I do think there's a chance for a bounce in that area as well. This is why it's very, very difficult to play this, guys. It's going to be very difficult to play anything short. I'm really not, other than very small scalp trades, guys, I'm really not looking to go short on anything until we get a nice strong bounce and reversal, and then I'll be more comfortable picking targets to the upside. But going short here, guys, you very easily could get wrecked because we could see literally a bounce. 9,400 breaks down. I do think that anywhere between 91 and 8,900 we could see a bounce, and as you guys know, anywhere between 8,900 and 8,500 I do believe we could see a bounce. So basically that means anywhere from 9,100 down to and including 8,500 I'd be looking for a significant bounce. Now yes, my buy orders are concentrated between 8,900 and 8,500. That's the main target that I'm looking for, but that does not mean that we can't see a bounce. And might it be temporary? Yeah, I do think we could come back down here, remember, this is only a very small supply or demand zone on the 4-hour. So if we come back down here, yes, this would denote a potential small bounce coming back up, possibly testing what was support, turning into resistance, and then coming back down here. That is a possibility. We'll have to wait and see how it kind of plays out here. But I just want to make it very, very clear that it's not going to be as easy as it has been to where price just decisively breaks 9,400 and it's just a free fall down to 8,900. I do think it does come down to 8,900, but I seriously doubt it's just going to be a free fall down to 8,900. I do think we have a potential couple areas to bounce in between 94 and 8,900, in between that zone. Again, I know that's a little frustrating, guys. I know that's not what you want to hear. I know it's very difficult to trade that zone. So I would just, I mean, unless you're dollar cost averaging, unless you're looking for an entry for a long haul, if you're looking for potential shorts, especially if you're looking for scalps, the shorter term shorts, guys, it's shorter term shorts, not to be redundant there. It's going to be a very, very difficult time to play. I think sometimes the best thing you can do, guys, best thing you can do is sit on your hands and just kind of, and I know that's frustrating to hear, just kind of sit on your hands and wait to see how this whole thing ends up shaking out, and know there's going to be plenty of opportunity going forward. Again, we're sitting at 11.9 billion. Go back and look and see the last time we've had at 11.9 billion on daily volume. It's been a long time. It's been quite a few months. So this is basically everybody and their brothers sitting around waiting on their hands, waiting for a resolution to come. And you trying to go against that, guys, going against the trend, trying to outsmart yourself. A lot of times you'll just end up getting wrecked. So again, not financial advice, not a financial advisor. You do what you want, just kind of telling you what's good for me. I'm going to wrap things there, guys. Remember to like, subscribe, hit the notification bell in the right-hand corner. Until next time, guys, please trade safe. Take care of yourselves. This is Working. Signing out.